Hi there, welcome back to another Crypto Dave video. It's Friday, which means another crypto interest rates and news update. Today is the 25th of June 2021. And as always, we start by talking about any new coins and interest rate changes. And the news is we do actually have a couple of new things to report this week. Firstly, Polkadot now available on Nexo. And secondly, USDT has been added to the Swissborg Yield app. So we'll talk about those a little bit more detail in a minute. But a couple of new coins at least after pretty flat period over the last kind of month or so, with not much happening in terms of new coins being kind of listed. But I've updated the kind of prices, I've updated the rates of some changes in Celsius, and I've updated, as always, the Swissborg rates, and they've been dropping substantially, really pretty poor today. Now I might change these to an average rate over the last kind of week or last 2 weeks going forward. These are currently the daily rates as of the last updated date here in the top left. But moving on to take a quick glance at the token prices. Now obviously a crazy week for crypto this week, massive pullback in the middle of the week. I seem to be saying this quite a bit. So we've been trading in that kind of 32 to sort of 38 kind of range, something like that, and then we had a big pullback out of that range, dipped down to just sub 29,000, and we bounced back into that kind of range again. So now seem to be trading back within the kind of range we were trading before, so somewhere between sort of 32 and sort of $38,000. As I record this, we're just over $33,000. Had a little pullback this morning, but Bitcoin down 13.7% over the last week, and a lot of these tokens down also. Cryptocom, the only one that's outperformed it by about 1%. Celsius down 19.7%, Nexo down 22.1%, and Swissborg, another really poor week for Swissborg, down 30%. You can see the graphs here, how they mirror kind of Bitcoin, this big pullback in the middle of the kind of week, and then a kind of like a bit of a recovery. So Crypto.com has actually had a reasonable recovery compared to Bitcoin, and Swissborg, you can see here the same kind of pattern, but a lower kind of trajectory, and another poor week for Swissborg, despite the fact it's been launching a new kind of yield wallet, and we'll talk about why that may be in a second. And then, so moving on to the stories, as we talked about before, Swissborg have launched Tether on their smart yield. So this was just announced yesterday. And I think the disappointing people for a lot of people was earn up to 8% per annum. So that's, of course, for their Genesis premium. So this is people that have locked 50,000 of the Swissborg token up for 12 months in the kind of app. The standard rate, as you can see here, 4% currently, which is, you know, I think the worst across anything. So their like-for-like rate, which is the regular rate, so no tokens, you know, compares to half of that for Nexo, under half of what you get for kind of Celsius, less than half what you get from BlockFi, even less than the Crypto.com flexible term with no kind of coins locked up. So really pretty disappointing kind of launch. To be honest, I think if I was Swissborg, I might have kind of waited a week or so, hope that their daily kind of yield rates went up a bit to announce this, because, you know, if you're announcing something that's a, you know, 16%, even though it's not a legitimate kind of rate because it's only for the Genesis premium, but when you're announcing a rate at kind of 8% and everyone in the industry is offering more than that, in some ways I think you're shooting yourself in the foot. So rather than a positive kind of like move, almost seems like a little bit of a negative move. So people that were, you know, in the past looking forward to kind of new coins being added to the kind of smart yield are probably now kind of going, okay, well, that's not an ideal situation. And the yields are going down and down and down. We've seen this for the last kind of month or so. We've seen a bit of a downward trend, but I mean, looking across the board, you're looking now, Bitcoin, this is a daily rate, 2.13%, 2.25% for Ethereum, 3.75% for Binance. Now, these are right at the bottom end of, they're either worse than their competitors or right at that kind of bottom end of it. Obviously, they've got their own token, but then, yeah, USDC and Tether down at 4% for a regular user, which is really, you know, it's half, if not that, 40%, 50% of what you can get from some of their competitors. So a little bit disappointing. I think people holding the tokens probably a little bit kind of miffed at this point. If you've locked up 50,000, you know, you'd have had a few good months while the prices of everything were doing really well, but yeah, we've seen a real downturn, not just in the yields for their smart yield kind of platform, but also the token price as well seems to be pushing down and down and down. So not a great time, I think, for Swissborg. Really, I think relying on a bit of a bounce in the industry as a whole to try and push some of their yields back up and hopefully gain or regain rather some of that kind of token price. Now I do have a number of Swissborg tokens. I've got 5,000 or 6,000, I think, not a crazy amount. And you know, I was holding on to them thinking, well, maybe I'll join the community premium. I think to be fair, I'm not going to do that. I think I mentioned that in the monthly revenue roundup video that I wouldn't be doing that now. So I'm really just waiting for a bouncing price, hopefully when the market kind of ticks up, in order to get rid of those tokens. I bought them pretty low, so I'm in positive territory with them, but just looking for like you know, a bit of a bounce back up, and then I will look to get rid of them. I held some hope for kind of Swissborg. I quite like the fact that they were doing things differently within DeFi rather than the traditional kind of routes that some of their competitors like kind of BlockFi have been going down. But yeah, I think unfortunately it just doesn't look like the yields in the long term are going to be viable for me to kind of hold crypto on this platform as opposed to their competitors. And now another story from Swissborg. It's quite an interesting one here. As always, these are linked in the description below, but it's talking about their protect and burn, where basically they are buying back tokens and burning them to sort of like protect the price or try and stop the price kind of like drop-in. So it's been just over a year since they did their first one. So the first one was in May 2020 and they burnt 97,000. Now they've done 20 burns since there. You can see them all listed here, valued at the time that they were carried out at 6.8 million, and currently they've got $500,000, so $500,000 in the burn pool. Now if we scroll down, there's some information here on the protect and burn, why they're doing it, how it kind of works, and how they're hoping it will sort of positively impact on the kind of price. Now you can see here and when they're actually kind of carried out. So this is the price, the moving average, and then when all their burns, these little hexagons with the flame in it. So you can see when the token price last year was fairly stable for a lot of the year. They would continue to do these kind of burns and then stopped basically when the price started to go up. And then once we kind of peaked and it started dropping back down, they restarted the kind of burns. We had another peak up here, and then since this dropped back down again, we're starting the kind of burns back up. Now doesn't necessarily seem to be doing what they're hoping it will do. You can read about all the kind of the details here of how successful it is. I think to be fair, I mean it's a nice idea. You're taking tokens off the kind of market, so you're reducing the kind of inflation, you're getting rid of them, which I think is a good thing overall. But you can see here the swings up and down in terms of price impact from the kind of burns, and you can see you know, it looks potentially like it's been successful, but I think realistically the token price is just following the market and their burns are relatively ineffectual. We can see the latest one, we've had a kind of burn and then you know, almost a 30% kind of drop in price. So I think it's a good thing for them to continue to do. I think the more tokens off the kind of market will help people that are holding their kind of token, but I don't think it is necessarily having the impact that they were hoping it would do. Certainly during downturns in the kind of market, I think that, you know, market sentiment trumps all these sort of additional kind of like strategies that a lot of firms have for trying to kind of shore up their token price. And in some ways this is the issue with a platform that has a token. There's no need for these platforms really to have their own token. You know, companies like Ledn and BlockFi don't have a token. They manage to do exactly the same thing, equally as well, if not in some cases better. And the issue with the kind of tokens, a lot of people have said, is that the minute you have a token, you're splitting your kind of like time between not just trying to generate a decent yield for your end users, but also trying to shore up your token price. And this is what obviously a lot of the protect and burn and stuff is related to. They're trying to shore up their own token price as much as they are going out to try and earn yield for their users. So I think that's one of the negatives from having a kind of token. It's an easy way for companies to generate revenue and generate kind of investment, but it's in the long term, I think, you know, it's just another kind of like thing that potentially could go wrong. And then moving on to some other stories, we've got Nexo. So as we mentioned before, Nexo have now launched Polkadot on their platform, so you can buy, earn interest and borrow against it in their sort of crypto-backed loans. So that's now available on Nexo. It's in the platform now. The rates are the same as all their other kind of crypto rates. You can look through it here, but the nice thing, they're doing currently a 0.5% cashback. So if you purchase through the Nexo exchange, you get a 0.5% cashback. You can see all the dot trading pairs here. And then moving on to last couple of stories, Crypto.com, their Supercharger is back. Last year I used to talk about this quite a bit, so I was participating in this, and I haven't for ages, but their Supercharger event is back. Now, there are various requirements. Basically, you tie up their own CRO token on the exchange within this Supercharger pool. And this is slightly different to the previous ones in that it's a 45-day charging period. It used to be a 30-day charging period, and then a 30-day reward period. So basically you lock up your tokens and you can remove and deposit them at will. I believe that's still the case for 45 days, and then for the next 45 days you get paid out your kind of proportion of what you kind of earn compared to everybody else, and it gets paid out kind of daily for that next 45-day period. So that starts in 2 days. So if you're holding a lot of CRO, interesting for people, and it's a Bitcoin one. It's a $1 million allocation. So nice to see Supercharger back with some with Bitcoin firstly, and also with a decent allocation here. Although should be noted, it's over 45 days as opposed to 30. And then finally, a little bit of a disturbing update here from Celsius. So they announced this a couple of days ago, but basically. They had, from a legal point of view or company point of view, been registered in the UK, Celsius, and they basically are moving their business kind of operations, or the business entity, over to the US. Now, that's not necessarily an issue in itself, but a lot of people think this might be a little bit more to this than meets the eye, because they've stopped accepting users from the UK. Now, just because you're not a business registered in the UK doesn't mean there's any reason for you to stop accepting customers from the UK. You know, I mean, BlockFly and Ledden, for example, you know, Nexo, everybody else, you know, they're not registered in the kind of UK, but you, as a UK citizen, you can sign up to these kind of platforms. So it seems a little bit bizarre why they have suddenly not just kind of moved from the UK. I mean, that's, you know, could well be just a business decision about what they want to do and how they want to kind of grow the business. But it seems a little bit bizarre that they suddenly have basically prevented new users from the UK signing up. Now, obviously, I'm in the UK. I can still log into my account, and they have stated that it doesn't affect existing customers, but a little bit strange. So I will be keeping an eye on the AMA later to see if there's some more information about this. They've also removed their application to the FCA. This is UK's Financial Conduct Authority. So the FCA basically has made it a requirement for crypto firms to register with them. So they've removed their temporary registration from that. I don't know if this had any kind of impact on it, whether they thought they weren't going to get it or something like that. But yeah, they're moving from the UK over to the US, but also, yeah, more worryingly, removing the ability for UK residents to sign up to the kind of platform. So I will keep you posted on this. There's a lot of speculation on crypto Reddit and crypto Twitter about this, but I'll keep an eye on this, and I'll bring you some more information hopefully next week when we find out a little bit more about what's been going on. So that's it for this week. Thanks very much for watching. As always, let me know if you have any questions in the comments below. Thanks for watching. Give me a thumbs up, that would be fantastic. I hope you're keeping safe and well. Hopefully I'll see you on the next video, but until then, have a great day. Bye bye.